One of the big questions is,
what is money?
For practical purposes, it exists in a series of heterogeneous databases, very different databases.
do you believe in crypto?
Digital currency may be an answer. It is a highly speculative asset.
I do own Bitcoin.
There is no second best.
Welcome to the Crypto Curious podcast. Every Wednesday, we dive into the dynamic world of cryptocurrency. If you're new to crypto, we recommend starting with our early episodes where we break down the basics and give you a solid foundation to understand the crypto world. And for the Crypto Curious, the seasoned addict or the industry insider, we're here to help you unpack the latest digital news. This week on the show, we're looking to why the market had a small pullback across the board. We'll also look at why Monero was hit by a 51% attack and what that actually is. Lastly, leverage hits the prediction market. We're going to discuss this one. My name's Tracey, and as always, I'm joined by my co-host Blake to bring you this week's news. Welcome to the show, Blake.
Hey, Trace. Great to be back. And it was really great reflecting on last week's episode with Jono and re-listening to that. I learned a few things that if you haven't checked that one out, please go back and have a listen to it. A special guest last week.
Yeah, he was great, wasn't he? It was nice and refreshing to have someone who kind of lives in the world of, I guess, the little seedier part of crypto, but really such a big advocate for it anyway. So like you said, that was really fun having Jono on the show. Okay, let's dive into it, Blake. This week, we're going to talk a little bit about where the market sits, because over the past week, the markets have seen a small pullback, and it's left a lot of people asking what exactly has caused this. So the main trigger seems to be a fresh US inflation data. Now, in July, the PPI, or the Producer Price Index, came in a lot hotter than expected. So even when you strip out the food and energy, the core figures that were still forecast were actually above. So what happened here was that it spooked the market and it caused serious doubt on whether or not the Fed or the US Federal Reserve would actually cut interest rates anytime soon, because we know, Blake, that's what everyone's actually waiting for.
That's right. So as a result of this pullback, Bitcoin dropped about 5%. Ethereum dropped around 7%, and Solana and XRP both fell around 10%. So just a small dip, but I think it's really healthy for the market to do this at this point in time. We don't want it to go up too quickly, because then the party will be over. So billions of dollars of trading positions, though, were liquidated. Those that are borrowed crypto to leverage trade have lost money because this one has caught them off guard. But there's also been, on the other side, a lot of people taking profits because the market has been so strong in the recent weeks. People are taking profits at the same time. So I think all of these things together just have culminated in the market cooling off and chilling out for a little bit, hopefully before another leg higher in the coming weeks and months.
Like you said, there's a few things there, the liquidations, the profit taking, things moving around. And we do talk about this all the time on the podcast, that we're expecting these pullbacks to happen, and it is just a part of the market cycle, and it just hopefully will be the next leg up coming soon.
That's right. And that's why DCAing into the crypto market is so important, because you get to take advantage of these moments when the market dips. You can automate your buys straight into Bitcoin and Ethereum.
Absolutely. That's very sound advice there from Blake, folks. So I think we'll leave that one there and move on to our next story. And this one, Monero, which is an OG coin, I guess, Blake, been around for a very, very long time. It's the leading privacy coin, and it came under attack this week. A mining pool called Quibic managed to gain control of more than half of the network's hash power, which allowed them to reorganize blocks on the chain. So that's what's known as a 51% attack. Blake, do you want to explain a little bit further, because we haven't spoken about this a lot, on what exactly a 51% attack is?
Yeah, so the miners that are in charge of basically putting all the transactions into the blockchain and making it permanent, making these transactions permanent. What's happened here with Monero is that they don't have enough miners to do this. So then one of the major miners, Quibic, that was participating in the blockchain, which is a privacy-focused blockchain, has ended up with more than 51% of the computing power to process these transactions on the network. And as a result, they could have started messing with the transactions and said, oh, that didn't go there or that went to a different wallet because there weren't other people on to hold them accountable. So it only happened for a short period of time. I think it was about 60 blocks or 600 minutes, something like that. And this is pretty scary. The whole idea of having a decentralized network or a network of a diversity of different miners is that this can't really happen. But I suppose when some of these coins get less attention and there's less growth in them and there's less interest in them, the miners move to more exciting coins like Bitcoin or one of the other proof of work blockchains. Now, it's really important to point out that a 51% attack can happen in several different ways. And that means they control more than 51% of the network. Now, this could be that somebody purchases 51% of all the tokens. And just using Bitcoin as an example, if you bought $1 trillion worth of tokens, then you could 51% attack the network. But it's really important to note here that if you do that, there's not really any economic incentive because once you attack it, then that $1 trillion that you spent on buying 51% of the network becomes far less valuable. So from a game theory perspective, there's not really much incentive to do that. But this is a different scenario where it relates to the miners that manage the security of the network. And it looks like it wasn't on purpose. It was by accident, but still a little bit concerning.
Yeah, it's a pretty big deal. We don't see this very often, and especially not in a top 20 coin like Monero. And it was good to see some quick responses, though. Kraken quickly suspended Monero deposits to protect users. Although, like you said, this didn't last very long, but the Monero price did drop 10% pretty quickly, hitting a 3-month low, although it has rebounded since then.
I'm surprised it only dropped 10%, to be honest. It could have been a lot worse, and particularly if those miners were malicious and wanted to really mess things up. But obviously, they're incentivized to maintain the network because they're getting paid to mine these blocks. So there's no real reason for them to want to destroy it. So yeah, there's certainly one for the history books here. I know Monero has an incredibly passionate community and it's a very important piece of infrastructure for the crypto ecosystem. And there's going to be a lot of talk about how they're going to prevent this moving forward.
Yeah, absolutely. And I think for privacy coins, especially, maintaining both security and decentralization is critical. And this event shows just how delicate, I guess, that balance can really be. So we'll keep an eye on how that one unfolds. Moving on, let's talk about our third story. Something new has just landed in the prediction market world. It's called Flippa, and it's rolled out leverage trading on Polymarket. This is the first time we've seen leverage applied to a prediction market, and its early users are calling it a total game changer. But let's first talk, Blake, a little bit about what prediction markets are in this world.
Yeah, we've spoken about these before, and this is where you can bet on all sorts of, like the football or the presidential race, or, you know, what the weather's going to be tomorrow, or even when baby Jesus is going to come back. Now you can also bet with leverage. Now, this is crazy. I didn't think the crypto world could get any crazier, but here we are, Trace, again.
Leveraging these calls. So explain exactly. So you can put your bet on, like you said, for this. And then do we know how far up these leverage calls can go? Are we doing 10x, 100x, exactly how far up?
Not exactly sure, but what it means is that you can borrow people's votes somehow and for a fee, and then you put those bets on, and if you win, you get an outsized return. But if you, of course, lose, you get an outsized loss.
Wow. Yeah, look, this to me is a little dangerous, but it's obviously there because it's what the users are after.
I think it opens up the door for a lot of manipulation as well. Generally, prediction markets are pretty good at predicting what's going to happen because there's pretty even incentives around those that come in with subject matter expertise on the topic, and those that are more confident or have more evidence that a particular outcome is going to happen generally put larger bets on. And in that sense, we can predict kind of relatively accurately an event that's going to happen, but this could potentially skew those fundamental dynamics.
Yeah, I know you've had those thoughts on this for a while, and that certainly is true. But look, it's still really early days. Leverage on Polymarket could be the turning point. If the team executes on the roadmap, then this will be the start of prediction markets evolving into something much bigger than people imagined. Polymarkets has been going strength to strength since it popped up. It would have been 18 months ago now. So really interesting stuff there. I think we'll take a break there. When we come back, lots of short, sharp news bites for us to get through. Here's Steve Smith buying a coffee. He's actually also investing in crypto at the same time, using Bamboo. You take care of drinking coffee with your mates, we'll take care of investing the small change. Start investing your change today with Bamboo. Welcome back. You're listening to the Crypto Curious podcast. Time now for our short, sharp news bites brought to you by the Bamboo app. Okay, first up, we have an interesting one here, all about meme coins. Pump Fun has reclaimed the throne in the Solana meme coin wars. It surged back to the top of the Solana meme coin launchpad rankings after Bonk and the Let's Bonk.fun had kind of taken the top spot for maybe 4 to 6 weeks, but over the last week, Pump Fun has really taken the reins back again. They sit on a war chest at the moment of about $2 billion, and their Pump token, that doesn't even really kind of play into it at the moment. So, but they're doing a lot of things by offering different prizes for tokens graduating early and doing a lot of different things to entice people to come back to their platform. So no doubt the meme coins are just going from strength to strength at the moment, even with the market ups and downs. So there you go, Pump Fun.
All right, another exciting one here, Gemini, which is a large US-based crypto exchange founded by the Winklevoss brothers, who you might know from the social network, who sued Zuckerberg for stealing their idea about Facebook, or trying to anyway. They are going to list their exchange, Gemini, for IPO on the NASDAQ. They have some interesting stats though here, Trace. They did $68 million in revenue in the first half of 2025, but reported $282 million in losses. So I don't know what they're spending their money on, but how do you make a loss of $282 million plus $68 million? So they're clearly spending it somewhere, but they're obviously taking advantage of this momentum. Recently, Bullish listed on the NASDAQ stock exchange, which is another crypto exchange, Circle, the USDC issuer, and then others like Kraken are also planning on it. So lots of momentum here in the crypto IPO space. And yeah, they're just trying to take advantage of this.
Awesome. Okay, up next, the S&P Dow Jones is pivoting towards DeFi and tokenization. So we've been talking about this one for a while, and this one's happening. So they are in talks with major exchanges and custodians about listing basically different versions of their indexes. So this is really important. I guess it marks a strategic push forward and really bridges traditional finance with decentralized finance. So keep an eye on this one, because once this happens, it really is tokenization for everybody, Blake.
This is huge. Imagine having a token that represents one share of an index at the S&P 500. That's obviously generating a dividend each year. It could be issued on chain, and then you can utilize that token in DeFi with a native yield of whatever, 8 to 10% per annum. So I think that's incredible innovation if someone can get it across the line.
And do they use many different exchanges, or do they pinpoint one that they use?
It's obviously going to be a bit of a challenge to get this one up and running, because obviously it's a security, the product, and it has different regulatory requirements when retail investors are participating in regulated space. So you're moving them across to DeFi is going to be a lot harder. But as a first step, I think it makes sense getting them onto some of the tier one exchanges.
Yeah, of course. What's up next?
All right. Standard Chartered has a prediction for Ethereum. So Standard Chartered is a big finance firm. They've predicted that Ethereum is going to hit $25,000 US by 2028. Hold on to your ETH, ladies and gents. They previously targeted 4,000 by the end of 2025. It now expects it to reach 7,500 by the end of 2025, and then 12,000 in 2026, 18,000 in 2027, and 25,000 in 2028. So hopefully this plays out. What a treat if it does.
They love a good prediction, those guys. They always putting a few good things out. So fingers crossed that one happened. Yeah. Well, Look, we're in a bit of a pullback right now, but if it charges back up to 7.5 by the end of the year, I think we'll all be happy. And that's it, Blake, for our news this week. We will be back next week with all the news. Until then, stay tuned, stay curious, stay connected. You can do so by joining our Crypto Curious Facebook group or our Instagram page. We have a weekly Crypto Curious newsletter to keep you up to date. Also, be sure to hit the subscribe button wherever you're listening to your podcast right now. If you're looking to dollar cost average into the crypto market, have a look at the Bamboo app. We provide a code CURIOUS, which gives you $10 of free Bitcoin to get you started. There's a link in the show notes below for that one. Thanks for listening and bye for now.
Bye, guys.